Shanay Shah joins in. He's the president at Shalby Hospitals. Very good morning to you, Shanay. Now, just for the benefit of all our viewers, you've recently declared your earnings and the company has reported total income of 240 odd crore rupees in Q1, up 16% year-on-year basis. When we talk about the net profit, that's at 20.8 crore rupees, almost flat, but just about a bump up of 2 odd percent or 2.5 odd percent when we compare on a year-on-year basis right there. But let me straight away come to the important point on the occupancy and the average revenue per occupied bed for Q1. How was the trend here? And also, what is the expectation and sustainable growth rate for both?
Yes, good morning and thank you for having me. Yes, the result for this quarter has been, a really good one for us. We have shown a 20% ROCE on the hospital business, and the business has grown on 20% on the revenue front. The occupancy has grown by about 12%, and of course, in terms of volumes, in terms of our ARPOBs, we have grown by about 8%. So that gives you the breakup of the revenue as we speak. But as I said, it has been an exceptional performance from the hospitals, especially from some of the hospitals which are in the growth phase and not yet matured. So, it is exactly the kind of result that we had desired.
Shail, another point I wanted to discuss, and then Shail can take up his questions as well, and that's as far as how did the medical tourism really play its part in this quarter? Is there a trend that you'd like to share here with all our viewers? Any guidance there too?
Yes, see, the medical tourism piece is basically going well now because COVID is far behind us. So most of the hospitals in metro cities are already seeing a great traction in terms of medical tourism. In our case, that is also that demonstrated because our Ahmedabad units is where we get most of our medical tourism, and we are basically treating. More than 100 patients, from East African and Gulf countries, every month. So, it is back to the pre-COVID levels, I can say.
Mr. Shah, welcome to Business Today Television. Let's now focus our energies on how the next couple of quarters look. First, please share with us your expansion plans. Hospitals has been a booming sector over the last 2 years. We've seen a fantastic listing of Medanta. Narayan Hirdale is at record highs. A lot of other peers that you track more closely than us are doing fantastically well. What should shareholders of Shalby expect from you in terms of capacity expansion over the next 18 to 24 months, sir?
Sure. So, I have said this earlier, and I think it's important that the shareholders and the potential shareholders understand that Shalby will be growing, on three pillars really. One is the mainstream multi-speciality hospital business, where we are looking to do anywhere between 800, anywhere around 850 crore kind of top line with a healthy 23 to 25% kind of hospital EBITDA margin in this fiscal year. In terms of the franchise, and the hospital business also has a significant upside because the existing capacity that we have the potential to go up to about 1,300 crore kind of top line in the hospitals business. We are having two additional hospitals which are coming up, one in Mumbai and one in Nashik. So we have two hospitals coming up. These will add another 300 beds capacity. As you know, Shalby is also a net cash company, so we are on sitting on about 80 crores of net cash, 200 crores of cash deposits. So we are continuously scouting for the right opportunities in Delhi and Calcutta for an inorganic kind of opportunity as well. So that is the hospitals business. The franchisee business, yes, we already have 5 franchises operational, and the target is that in the next 3 to 5 years, we will have between 30 to 50 franchisees, and we've already shortlisted 30 cities where we would like to be present. The third vertical, of course, is the implant business, and the implant business is growing significantly, although at a smaller base. So, the year we acquired it, we did a revenue of about 30 crores in the first year. Last year, we did about 90 crores there. We are looking to do anywhere around 130 to 150 crores in this year in the implant business. So there is a lot of headway for the implant business to grow because of the base effect over there. So these three verticals combined, we believe that there is significant opportunity to grow for us organically as well as inorganically.
Mr. Shah, you've mentioned very correctly that on a net cash basis, you are positive because debt levels are about 140 crores on the balance sheet and you have a net cash of about 150 crores. Any fresh specialities you are likely to add over the coming quarters? And you've mentioned, you're looking at rivals in terms of acquiring assets across other cities. Any geographic expansion which is close to fruition, if you can share?
Well, in terms of adding specialities, I would want to say that we already are significantly penetrated across all specialities. So we do all the high-end work like liver transplant, kidney transplant. In fact, we've started doing hand transplants now. So we are doing a lot of complex work in our hospitals already. In terms of geography expansion, as I told you, Mumbai and Nashik are the two hospitals where we are already coming up. These deals are signed, and in the next 24 to 36 months, we'll see operations begin. And as I said, it's too early to comment on an inorganic opportunity at this point of time. But yes, we are talking to hospitals in Delhi and Calcutta, for a potential acquisition in Delhi and Calcutta.
Okay. Well, many thanks, Mr. Shah, for being with us on the Business Today TV, Market Today show and discussing all these insights from your earnings. All the very best for the coming quarters. And we shall definitely, come back and speak to you again to get more insights about your business going forward too. Let me take it across now to Mileen. Mileen, you heard the management of Shalby Hospitals. You mentioned, from the healthcare space, your topic was HCG today. How are you looking at Shalby? And is this also a stock that you, look at?
Well, see, currently on the daily chart, Shalby is giving a RSI negative divergence. Now, this suggests that there could be some kind of a distribution over here. So those who are holding this stock can, because this stock has really rallied for nearly 7 weeks now, and now it is showing sign of fatigueness. I would say that those who are holding this stock can keep a stop loss of, say, somewhere around 190. On the higher side, if it holds the stop loss of 190, then yes, you could expect a 200 to 210 level. But at present, I would not ask for a fresh entry in this stock.
If you like the video, do like, comment, share and subscribe.